Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right, so we had the Fed yesterday. What that did was it expanded things out of that tight, short-term, hourly consolidation. And, the 9-day never even got touched in this entire process, and we continue just to march to the upside. 4,700 is open for business, really without too much of an issue, unless the bears fight back, or unless we start to see some kind of a pullback, as people kind of take profits and hedge things and do whatever into tomorrow's jobs report, you could see a fairly steady march if they can convert 62 half. So we've been up to 62 half, 62 quarter a couple of times this morning. If they turn that 60 to 63 area into support, then you could see it march up into 75. But 4,700 today seems kind of like a bridge too far. I mean, we've really run it up the last 24 hours or so, but that doesn't mean it's going to go down. So what I will say is this, and then we'll look at the hourly chart. The things that get back to me that are amazing to me about how people simply insist on shorting this thing again and again and again and again based upon the idea that, quote unquote, it's gone up too much, or I just can't buy it. I can't do this, I can't do that. You cannot trade like that successfully in a sustainable fashion. If you are constantly walking around calling tops, saying that this high is going to die and this high is going to die and this high is going to die, in an environment where really, with the exception of a little bit of a steady little flag back, little pullback that popped, you've seen dips get bought this year again and again and again and again, you're going to find yourself on the wrong end of that stuff and then not be able to participate in the larger move. It's okay to get short. It's okay to get short. I mean, we've been short at various periods every single day of the year. But when it doesn't work, you got to get long. So it's a matter of wanting to make money more than wanting to be right or look smart or say, hey, see, I called that. Who cares? Who cares? Who cares? What about the other 98 times that it didn't happen? You need to get in tune and get comfortable with being involved with the trend of price as we go. And that's something that we just hammer on in the room all day long with a lot of success. So, hourly chart, you get your pre-FOMC price 46.1625. So, here's that consolidation we talked about. And it carried its way all the way into the Fed. It got very tight yesterday. So, we tried to trade from 9:30 to 10 or 10:30 yesterday, and then we just stopped. I went to the gym, we hung out, we didn't do anything. From 10:30 until after 2, there were 0 setups, 0 trades, 0 anything done in the room. Why? Because it's not doing anything. Why would you want to trade that? What the hell is the matter with you? So these no trade zones keep us out of a lot of nonsense. Because what will happen invariably is you'll bounce around here and you'll take a bunch of trades and take a bunch of trades and you'll be tired. By the time you need to be focused, you're done. Your brain is jello. You've taken 550,000 trades. Your broker loves you. You hate yourself. And now it's time to trade a really big news event. So this whole area in here, we didn't trade at all, which is 1,000% the right move. Now, so they break it down. They trade as low as 13 quarter off the open after the news. So we end up at a long around 19. They tried to bring it in. You can't see it because this is an hourly candle. They tried to bring it a little bit at 24, and we ended up getting short just to try to see if we could get it. So we took profit. We tried to see if we could get short and get a free look at the pre-FOMC price of 46.16 quarter. It got us a couple few handles to the good, so we were running around with even stops. So we got the free look, but it didn't go anywhere. So what's the key at that point? Well, when it comes back up and it takes you out, are you going to sit there stubbornly and say, no, we've gone up enough, this needs to go down? A lot of people do. And then they get their ass handed to them. So what do? Fine. Doesn't want to go down? Let's go. We're going up. So we did a long against 26. Worst entry was 27. The thing comes back into 25 quarter. Gets everybody filled once, gets everybody filled twice, and then we're off to the races. And you're not fighting price, and you're not chasing, and you're not buying highs. You're involved with what the market wants to do. It's your job as a trader to be involved with what the market wants to do. It's about the market. It's about price. It's not about you. It's not about me. It's not about anybody. It's about being involved with the direction that price wants to go. And if you do that on a consistent basis, you're going to be profitable. It's consistency and prioritizing being involved with what the tape wants to do versus whatever the hell it is you think, or whatever they told you at the Holiday Inn Express, or whatever your yearly subscription to Barron's tells you that the jobs report's going to do. So that's just a little microcosm of how you can try things on the short side. But if they don't work, that immediately goes in the circular file, and you get involved in stuff that seems to want to work until it doesn't. Maybe we can't take out 62.5 today. Maybe we're going to put in some lower highs. You know what? That's fine. We'll be short. But when that stops working, we'll be on to something that is. It's about being in what works. Want to learn how to do that stuff? Come on in. We would love to meet you. It's a great group of people. All right. VWAP sitting around 56.75. Proprietary moving average 58. 5-minute mid is 59. I think it wants to come in a little bit here. I think it wants to test this hourly mid band probably sometime during the course of the morning. Right now, it's sitting about 51. So right now, we've rolled our runners up on that trade yesterday to 30. So like mine's sitting at 56. So if I get taken out, I get taken out. It's a great trade. It's a 20 handle trade because we did 10, then we did 20, and we did 30. And I haven't even had my third cup of coffee yet, and I can add, so that's good. So I would expect some kind of a move down today to test that hourly mid. Whether the bears can put up a fight there, whether they can convert that into resistance is going to have a lot to do with whether we have more of a one-sided day or a day that just wants to take a break into the Fed. We could chop too. So be ready for all of it. All right? Have a fantastic day. Be safe. Be healthy. Take care. Trade them well. Stop fighting price. Have a great day. I'll talk to you soon.